What matters the most to you as someone who keeps a watch on the U.S. economy? Is it that Supreme Court ruling and pushback on President Trump's tariffs, who he has said he's going to find other ways to do this? Or is it all the economic growth, kind of the mixed messaging, maybe to some extent on inflation a little bit hotter than we thought and growth a little bit weaker?
Yeah, thanks, Carol, for having me. It's good to be back. I think if you had asked me this question at 10 a.m., obviously I would have said, it's the GDP print, the inflation print, particularly the inflation print, just because it was quite hot.
Yeah.
But, fast forward the last couple of hours, clearly the Supreme Court decision is very, very important. The uncertainty that it brings to the table, you can't run away from it. In as much as we thought tariff risks, tariff-related risks were receding, it's come right back. So, yes, the president has imposed the 10% blanket. I still have to figure out if that 10% is truly a blanket.
Right.
Or are we going to exempt pharmaceuticals? Are we going to exempt oil and gas? Which sounds to me like what they will do. But I don't know at the moment. I don't think it's clear. So when we see that executive order, we will find out.
You have in your notes that you're calling today Liberation Day 2.0. Of course, we had Liberation Day last year. It was a big market-moving day as well. You link this, though, to optimism. Are you still optimistic that this is going to be good for the U.S. economy, particularly in light of Trump floating, 10% tariffs?
No, I do think that, compared to, I would call this echoes of Liberation Day, right? Not quite seismic as Liberation Day was. The markets are not down, 10% or 5%?
Yeah, which we've been talking about feels kind of telling.
Yes, yeah. But I do think that to the extent that we have the 10%, if the administration follows through with all of the exemptions, it's going to be fine because effectively it will be lower than what we had before. If it's a blanket, that means collections will be slightly higher. So that is, I don't think most companies have planned for that.
Right.
In terms of all of a sudden I have to pay more in tariffs, right? Mm-hmm. So I think that would bring some level of uncertainty. The other point is, it's just for 150 days. What are they going to replace it with? It's most likely going to be more sector focused. So sector focus by nature would affect some countries a lot more than others. So that brings a lot more uncertainty. It's probably going to affect pricing decisions, capex decisions, and the likes. I don't think that's what the economy needs at the moment, because this is an economy where if the government gets out of the way,
right,
the tailwinds are actually quite strong. So you have to now think, this may be a little bit negative because the economy on its own was relatively resilient.
Yeah, I want to go into that. I also just want to mention that the president did threaten 15 to 30% auto tariffs. Now I'm looking at Ford is up about 1.2%, and I think GM is little change. So it's not like it's actually up about 1/3 of 1%. Yeah, those tailwinds, if you will, whether it's higher tax refunds we get because of tax cuts, corporate tax cuts that could lead to spending. I mean, there's a lot of stuff that could be very stimulative. So that brings us to that hotter inflation print, which you, in your notes, kind of say it's a reality check. Like, we have to kind of own up that, as we've heard from the Fed or Jay Powell, right, inflationary pressures are still a thing.
They are still a thing.
And could even maybe get worse.
Yeah, it definitely could get worse. I think now with this renewed uncertainty, potentially could get worse. I think there's this wedge between CPI and PCE at the moment. The CPI print we got a few weeks ago was, 2.5%, 2.4%. Lots of people jumping up and down saying, hey, clearly disinflationary. But with this reality check, inflation is stuck at 3%. That's essentially what it is. And if you compare where we are today with headline of a year ago, it's actually accelerated.
Well, what's really kind of wild, and Mike McKee, who was breaking down the Fed minutes on Wednesday, says, they're going through, and then you get to, I think the last paragraph where it said Fed officials were wary of cutting interest rates at their January meeting, but several suggesting the central bank may need to raise rates if inflation remains high. So they are already, continuing to be very vigilant when it comes to higher inflation.
You have to be, because 3% is not 2%, obviously, right? Mm-hmm. And with all of the tariff noise, you still are not clear whether it would accelerate or not. So the Fed, given a labor market that seems to be relatively stable now, the balance of risk has shifted. It now has to be inflation, inflation, inflation.
Does this make the report we got today about growth being slower than we expected more of a blow to the economic outlook, particularly if we have the Fed raising rates in an environment where growth is slowing?
I do think that if you dig deeper, once you go under the hood, you realize that about 100 basis point or so, 1 percentage point, was because of a shutdown. If you add that back, you're talking about 2.5% growth. The economy on its own is resilient. I don't think you can take that away. And you're also going to get some payback during this quarter, right, when we get the GDP. So potentially growth could be slightly higher.
All right, you're not a political analyst, but I've got to throw midterms into this because I have to think as the president starts to, go to different states, we've started to see some of that. He is thinking a lot about midterms and whether or not Republicans lose a lot of seats in Congress, and which would be really a vote on his White House. So having said that, do you think that will shape what he does with tariffs and policies? Because he wants an economy, right? Any president wants an economy humming along, whether it's midterms or obviously a presidential race.
I think that would be the rational view. And without me going further, anything can happen between now and the midterms, right?
Yeah.
There will be that affordability push. We're starting to see that. Hopefully, if that is really, really strong, that may overwhelm the tariff noise, right? And to some degree, corporations are used to the tariff noise to some degree. So hopefully, there will not be a knee-jerk reaction from a price standpoint going forward.
How optimistic are you about the refunds for the tariffs? This morning, before Trump spoke, the question was, how are all of who's going to get the refunds, and how smoothly is that process going to go? How are you thinking about that?
So I'm going to go from I'm not a political strategist to I'm not a lawyer, but the reality is that corporations have sued, right? They have the legal basis to ask for a refund. Now, prospectively, going forward, they may still pay tariffs, but it seems to me that they have the legal basis to ask, since it's illegal, hey, give me back my money. It doesn't belong to you. That's my sense.